This week in Spain, I welcome back Chris McCann. How are you doing, Chris?
I'm very well, thanks, Howard. It's good to be back.
Yes, time flies. It really does.
It does.
Well, last week he shared valuable insights into where and how you should hold your investments as a UK national living in Spain. This week we have another investment-related subject, one which all British expatriates are familiar with: ISAs. Chris would explain the tax and other implications of continuing to own these as a Spanish resident. Chris, are ISAs still popular in the UK?
Yes, Howard, they remain very popular in the UK. ISAs, or individual savings accounts, remain a very tax-efficient way for UK resident individuals to save and invest, as any dividends, interest, or capital gains earned within an ISA are tax-free. This being the case, what we typically find is that many people looking to become resident in Spain usually have a proportion of their savings in ISAs, and also some people who've already moved to Spain and been resident for many years still hold up funds in ISAs.
Can you continue to own ISAs once you've left the UK?
Yes, you can. You can continue to own ISAs after leaving the UK, but there are restrictions, and I'll just run through those. You can't subscribe to an ISA whilst you're non-resident of the UK. Once you move abroad and become non-UK tax resident, you cannot contribute new money to your ISA. The only exceptions to that are Crown employees, for example, diplomats or people working in the armed forces. Your existing ISAs will remain open, and you will continue to earn interest, dividends, or capital gains tax-free under UK law. And if you become a UK tax resident again at some point in the future, you can start contributing to your ISAs as normal within the annual allowances.
What are the tax implications for owning UK ISAs as a resident of Spain?
Well, existing ISAs will remain tax-free in the UK, but that's pretty irrelevant if you're a resident of Spain. As a resident of Spain, the tax treatment changes significantly because Spain does not recognise ISAs as tax-free accounts. This being the case, you must report and pay tax on any income and capital gains they generate. And as savings income, any interest, dividends, and capital gains will be liable to savings tax rates in Spain ranging from 19 to 30%.
What other aspects should our listeners be aware of when weighing up whether to keep or sell their ISAs and other UK investments?
So if there are listeners who are Spanish residents and you're deciding whether to keep or sell your UK ISAs, there are some important factors to consider. As I've just mentioned, they're now fully liable to Spanish tax. As the Spanish tax authorities have strict rules in relation to foreign assets, you may need to include on a foreign assets declaration, known as a Modelo 720, which we've covered on these radio broadcasts fairly recently. And you will also need to include in your annual tax returns. In my experience, a major proportion of ISA holdings are based in sterling. And if you're living in Spain and spending euros, this can open you up to currency risks, which could negatively impact your returns. Finally, as UK-based assets, they will remain subject to UK inheritance tax, even if you have been outside of the UK for 10 years and have the option to avoid any exposure to UK inheritance tax. Taking all these factors into account, our advice to clients is normally that they consider selling their ISAs and moving to investment structures that are more appropriate for Spanish residents. Ideally, you sell whilst still resident in the UK and prior to your move to Spain, thereby avoiding any tax. But if that's not possible, it still normally makes sense to sell and limit your tax payable to date.
Interesting. Well, the website is the best port of call.
It is, Howard. Listeners can visit our website, blevinsfranks.com. They will be able to find the contact details of all our local partners. They will also be able to complete a contact form, and somebody from Blevins Franks will be in touch with them to arrange the most appropriate next steps.
Finally, Chris, can you remind our listeners about the seminars Blevins Franks is coming up later this month?
Yes, Howard, we have a number of seminars. I'm going to just read out the dates and the places of our seminars, so pen to the ready. And I will state that if you want details of each seminar or want to know where all the seminars are, please visit our website, blevinsranks.com, and it will state full details in relation to each. I'm just going to go through the list of where they are and the dates. We are holding seminars in Majaca on the 23rd of April, in Los Alcazares on the 24th of April, in Mallorca on the 29th of April, in Marbella on the 29th of April, in La Vinuela on the 30th of April, and also in Tenerife and Lanzarote on the 28th and the 30th of April. All our seminars will be covering the recent UK tax and pension reforms, and we will also be considering whether we'll be looking at your UK assets and determining whether you should be keeping your UK assets. They will also cover pensions advice post-Brexit and cross-border estate planning.
And of course, if people want to attend, best book first on the website at blevinsranks.com.
Yeah, I would recommend that people do reserve a place relatively quickly. Our previous seminars were very popular and there were a lot of people wanting places. So yeah, if you want to book a spot, please visit our website, blevinsranks.com.
Many thanks, Chris.
Thank you, Howard. Look forward to speaking soon.